What if the reason you haven't found a great storage deal isn't because there aren't any? And I can tell you with certainty, by the way, that there are. It's because you're looking in the wrong market. Now, many investors obsess about the wrong things and they ignore the most critical foundational element of the whole thing, which is the market selection. Because listen, you can be the best storage operator in the country. And if I drop you into a weak market that is overly saturated, doesn't have enough demand for storage, and or has certain demographic challenges like very, very low population, high crime rate, low medium household income, I can tell you that no matter how great you are, you're going to struggle. Or you can buy an average facility in the right market, be an average operator, and let demand do a lot of the heavy lifting, and you stand a much better chance to succeed in the right market. Now, in this video, I'm going to show you exactly how you can evaluate a storage market quickly, what actually matters, what doesn't, how to filter out bad markets before you even waste any time underwriting the deal. So with that being said, let's sharpen your edge and dive right in. Hey, my friend, welcome back. If you've already completed your buy box blueprint and you have built out your market map, amazing, awesome, I salute you. You now know what kind of deal you want and where you want to buy it. So now is the time to uncover the next piece. And that's where those actual deals live. Because I always say something to coaching clients here in our Storage Wins community, that clarity without consistent activity is not going to move the needle. And in this module, which is module 3, and now we're getting into deal flow. This is the first video. We're going to be diving into the market edge. And this is where the real storage deals live. So here's the thing. My goal here isn't to overwhelm you with tactics. It's to show you the landscape. And that's going to be the 3 main channels where most profitable storage deals are found. So you can see how this all connects before we start building your deal finding system. So we're going to get tactical starting in the next video. I want to get you up here, 30,000 foot view, and I want to just have you survey the landscape. This is going to give you a really, really strong foundation and understanding. So let me first start this with a story that really shaped how I think about deal flow. And this applies no matter what asset class you're into. Obviously, you're here, and so you're interested most likely in buying your very first storage facility, possibly if you're already part of our Storage Wins community, your second, third, or even fourth deal. But I remember back to my very first storage deal and even my third one, both came from the same broker. Well, in fact, my first deal came from a wholesaler who was a friend of mine, and I built a relationship. And because I had my buy box blueprint really dialed in, he shared with me the first deal. Now, when I went under contract to buy that facility, which was a 43,000 square foot facility in Mississippi, I had an opportunity to meet the broker who had that deal as a pocket listing. And we're going to talk about that here and coming up in the second channel. Right now, we're talking about the first, but this particular deal that I went under contract on was not yet on the market. And when I flew out to Mississippi and I was performing my on-site due diligence, which is something we'll talk about in a later module, I had the opportunity to meet with him and spend a couple hours with him as we walked the facility. And I just got to know him on a personal level. I learned more about him. We started building a relationship. And that is really the theme of this entire video. It's all about relationships and about relationship capital. You need to be relationally driven, not transactional. And because I built a relationship with him, and because he came to know me as somebody that followed through, and I actually did what I said I was going to do. I ended up closing on that facility, and I continued to maintain contact with him. I continued to build a relationship with him. I let him know that I was not a one-trick pony. I wasn't going to be a one and done, but that I wanted to continue to do business with him. And even if that didn't mean that I could buy a facility from him, maybe I could connect him with other people that could be buyers for him. So I was always seeking to be a go-giver, which is one of my favorite books behind me, The Go-Giver. If you haven't read it, slight plug, definitely read The Go-Giver. I absolutely love it. But anyways, I built a relationship with him, and about a year and a half later, I'll never forget, he gave me a call just kind of randomly, and he said, "Hey, Alex, I know you bought this 43,000 square foot facility from us about a year and a half ago. How would you like to own an additional 37,000 square feet of storage just 3 miles up the road from where you bought the first one?" And I was like, okay, you've piqued my interest. And that deal took, I don't know, I want to say about 8 months or so to put together for a variety of reasons. But here's the point. That second deal I bought was also a pocket listing, meaning it wasn't on the market. Nobody else knew about it. He called me because of the relationship that was built and because he viewed me as somebody who could get the deal done and performed. That all happened because of relationships. I made it a point to build genuine relationships, not just with him, but with everybody, with wholesalers, with lenders, with other storage investor owner operators. I didn't just reach out to brokers and send an email and say, hey, add me to your list, or here's my email. I actually picked up the phone. I followed up. I stayed curious. I stayed in touch. And that's how I was presented with opportunities. And I since have sold that 80,000 square feet of storage. I sold that portfolio and fortunately did very, very well. And I think the big thing that I want you to know is that you need to build relationships with people. You want to be top of mind so that when they get an opportunity, they think of you. And understand something, and this is something I share with my coaching clients inside the Storage Wins community, is that having meaningful conversations with storage owners and brokers is what it's all about. Because conversations lead to conversions, conversions lead to contracts, and contracts lead to cash, and cash leads to cash flow. That's the heartbeat of deal flow here. It's not about chasing listings or chasing deals. It's about building relationship capital. It's about building trust, positioning yourself as someone who's going to follow through and execute. And that is when opportunities start to find you. So when you just take a step back and you look at this business again from a 30,000 foot view, every deal is going to come from, I think, one of these three main channels. And this is something I call the deal flow spectrum. Think of it like three lanes on a highway. You don't need to drive on all three at once, but you do need to know how each one works. And then I'm going to recommend that, and there's going to be a call to action at the end of this video, is that you focus and you just pick a particular lane. You can't make a wrong decision here, and I'll help guide you as to how you can pick that lane. But let's actually start talking about that first lane, okay, or otherwise said channel one. And that is the direct to owner outreach. And to me, this is where there's hidden gold. This is where I believe the biggest opportunities are and the best terms and deals usually live. Now, I'm talking about mom and pop owners who aren't listing these facilities with brokers. They might be thinking about selling. In some cases, they do want to sell. In other cases, they haven't thought about selling, but when you build a relationship with them and you show them what's possible, it piques their interest. And then they go from not thinking about it to thinking about it. And I've actually bought and worked with owners who were not really thinking of selling, but they ended up selling. They're usually, in my experience, they're older. They're in their 60s and their 70s. The majority of time, these mom and pop owners are just tired and they're getting ready to retire. They want to simplify life. They want to spend time with grandchildren, or they want to travel. They just want to slow down. They don't have the energy and the bandwidth to want to continue to operate these facilities. And in many cases, they're not even really treating it like a business. And they might not have had any conversations with anybody about selling these facilities. The ones that I love, and we're going to talk about this in the next video of this module, is facilities that might not even have a website. You would be shocked and surprised how many businesses, because a storage facility is an actual business. It just has the benefits of real estate. Just one of the many reasons I love this asset class. But a lot of these facilities don't have websites, or they have a website that looks like it was built in 1999. There's no automation. They have no marketing in place. They have little or no Google reviews. And if they do have Google reviews, sometimes it's under 4 stars, which is not great. One of the things I like to do, and again, we'll talk about this in the next video, is I always go to the contact us page, and I oftentimes see a personal email, like at yahoo.com, at hotmail.com. Believe it or not, I've even come across emails that at AOL, like super, super old school, everywhere, especially in tertiary markets. So when you reach out directly, whether that be by phone, by text message, it could be direct mail, it could be even like showing up, which is how I've had coaching clients. In fact, I have one coaching client who has bought 3 deals. He bought 3 deals in 11 months by doing that very thing, like simply like picking up the phone, calling, and then showing up. And it's something we call driving for dollars. Now, this is how you separate yourself from others, where you're not going to be competing with dozens and dozens of other buyers. You're having a conversation that can lead to potential terms deals, what we call seller financing or creative financing, or simply just buying it at the right price. You know, that first deal that I bought in Mississippi and the third deal, I didn't necessarily want to be in that market long term because it didn't fit a lot of the demographics we previously discussed in Module 2. But I knew I was buying it at the right price, and my plan was to increase the value of the facility by increasing the occupancy, raising the revenue, raising the net operating income, and then the value is determined and driven by what we call the NOI. Don't worry about that for now. We're going to be talking about that in the deal filter system coming up here at the end of this module. Do not skip ahead. Continue to follow the process here. Trust the process. But one of the things we're going to dive into here in this module is having these meaningful conversations and connecting with these mom and pop owners in something I call the direct contact blueprint. Because to me, the hidden gold is found in conversations. All right. It's found in the relationships. And that's really what the point I want to drive here. Now, the second channel, I've already done a little bit of foreshadowing. I've planted a few seeds along the way, dropped a few breadcrumbs if you've picked those up. But channel 2 is where I would loop in brokers, wholesalers, and again, relationships. And this is something I call the connection channel. This is the middle lane between on-market deals and off-market deals. It's where brokers and wholesalers often know about deals before they even hit the market. And again, in channel 1, I mentioned how my first and third deal, those were pocket listings, or sometimes people refer to them as shadow inventory. It's opportunities that the public or the market doesn't yet know about. And the only way you get there is by building meaningful relationships. And the only way you build those meaningful relationships is by having meaningful conversations. Hopefully you're seeing how this all works and comes together. But brokers and wholesalers oftentimes know about deals before they hit the Crexi or LoopNet or the MLS in some cases, or they ever hit the internet, because they are constantly talking with owners on a daily basis. Most brokers that I know that I built a relationship with might pound out 200 to 300 cold calls a day. I mean, that they just prospect like machines all day. And so they have a finger on the pulse. They know when a storage owner is thinking about selling, considering it, when the time is right, because they're constantly in front of them, pounding the phones. And there's something that we can draw from that, by the way. Some of those owners in some cases are just testing the waters, right? They just kind of want to see, hey, what could I get for my facility? They might say, hey, listen, if you have a buyer, bring me an offer. Right? I've heard that before. And this is where you taking the time to build relationships with these brokers, with these wholesalers can really pay off. Because think of every conversation you have as a seed that you're planting. But just like a really good farmer doesn't just plant the seed and then goes on vacation for a year. Nothing's going to happen, right? You got to water it. And the way that you water relationships is by being yourself, by being genuine, by being authentic, by adding value and contributing without the expectation of wanting something in return. Now, let me pause for a quick second. If you are serious about buying your very first storage facility, don't piece this together video by video. Inside the Cash Flow Maps membership, you're going to get the entire acquisition system unlocked right now, plus the underwriting tools, the templates, the scripts, and the deal filters that we actually use. And you can't get these here on YouTube. You can actually create a free account to access and unlock the entire acquisition system along with all the valuable resources. Click the link in the description, get the full system, and then let's come back to this and keep building. Back to the video. Obviously, you're reaching out to these brokers and wholesalers because you want to do deals, like you want deals, you want to transact. And so don't be shy about that. They want that. That's how they get paid. But what I mean by giving without the expectation of something in return is I just want you to give selflessly and contribute and add value and trust that the laws of reciprocation are going to tip back in your favor. And if you do that and you follow up with value and you just stay in front of them, not in an annoying way, okay, I want to be clear about that. You don't want to be the annoying pest. You want to be the welcome guest. Okay, there's a really, really big difference between those two. And I can't stress this enough because the best deals in my career and in my experience have come from people who remembered me when the opportunity showed up. Not about who you know. I think it's about who knows you and who thinks of you when they have something worth sharing. And it's not only about them thinking about you, but then you have a reputation and you've built enough trust and confidence in them that they believe you can get the deal done. All right. Do not feel overwhelmed by this. As they say, Rome wasn't built in a day. This doesn't happen overnight, and that's okay, right? We set the goal and the outcome and the desired result we want, but we need to focus on the daily, weekly, monthly activities and the actions. That's why we call our community storage wins, because it's about those micro wins that when stacked and done consistently, that will lead to the big storage win. So I've mentioned already, this channel also includes wholesalers. Same thing. Building relationship with them as well. They could be a really good deal source for you, because these are people that their goal is to just find, most of the time, off-market deals. And they may or may not have the capital or the confidence to close it. Maybe that's just their business model, where it's more of a churn, right? What I did in the single family house business for 14 years, where we just grinded out deals every single month. And the good thing about that is that they can make a lot of money. And as you're going to learn in the amplifier session, in the instant payday video, it's, wholesaling storage facilities can be very lucrative. It's not uncommon for these to be 6-figure deals, which is pretty amazing, because how many of those do you need for it to completely turn around your financial situation? So the point here is, whether we're talking about wholesalers or brokers, you got to think long-term. You got to build enough credibility and trust and confidence that when they have a deal or an opportunity, they're going to think of you and bring it to you first. I always share with coaching clients that when somebody thinks about storage, or they drive by and see a storage facility, you should be the first person that they think about. And if not, you're probably not talking enough about it. You're not planting seeds, dropping breadcrumbs, sharing with people what you do and what you're looking for. So do not underestimate this second lane or this second channel, because your reputation can really start to multiply and produce a lot of fruit in the future. All right. But the thing is, you got to think long term, and you just got to be committed to building those relationships on a daily basis. Now, the third channel or the third lane is on-market deals. And this is the deals that hit LoopNet or Crexi, which, think of LoopNet and Crexi as like the commercial multiple listing service, right? In residential, we have the MLS. In commercial, a lot of the on-market deals that brokers are listing, where brokers represent the seller, those hit LoopNet, Crexi, CoStar, and there's some others out there. But those are public listings. They're visible, they're out there, there's a lot of competition, there's a lot of people chasing them, looking after them. And honestly, in my experience, a lot of the deals are not gonna make sense, at least when you first look at what's called an offering memorandum, an OM. A lot of the numbers are going to be based on pro forma, meaning here's what the deal could do if it were generating more revenue, if you did X, Y, and Z. However, do not underestimate deals that are on market just because they don't look like deals. A broker that I built a really good relationship came on one of our Storage Wins community calls, and he talked about how, hey, I don't care how low the offer is. We need offers to present to our sellers, which it basically is their boss, the people that hire them. So we'll talk about this more in an upcoming video, but do not be afraid to just make offers, because this business boils down to meaningful conversations, analyzing deals, making offers, going under contract, and closing. If we were going to simplify this whole process, that's the roadmap. So what I like to share with people is, when it comes to LoopNet and Crexi, it's not that you can't find a deal on there. You can. For sure. A lot of the deals on paper don't make sense, but think of that as like your practice field. That is where you have the opportunity to analyze on-market deals, to get the reps in, the repetitions. It builds your speed. It sharpens your eye for what we call underwriting, which is an industry way to say just analyzing or evaluating a deal. It helps you recognize opportunities faster. And every once in a while, you're going to spot a hidden gem. Maybe it's a stale listing where it's been on the market for months and months and months. Maybe you catch the broker and the owner at the right time. It could be a facility that just was, maybe it doesn't have photos, or maybe there's something incorrect about it. There are opportunities there, but you likely have to go through a lot of them and find those hidden gems. Sometimes the deal isn't bad. It's just the way it's presented. And that's where you can step in and win. So don't discount this channel. I prefer off-market strategies, which in the next couple of videos, we'll be diving heavier into that. But I certainly, as I've shared with you earlier, my first and third deal were because of the broker relationship. A broker had the deal that others didn't know about. And look, here's the big takeaway. Here's the big insight that I want you to take from this. No matter which lane you choose, every great deal flows through people. Every single deal, somebody has had their fingerprints on that deal. And so you don't need to be the smartest person in the room. You don't need to even be the most consistent or curious or connected, because deals don't appear out of nowhere, right? They move through relationships. And one of the things that I think I've come to realize is that you don't necessarily find deals. Sometimes you got to create deals. Sometimes you can find them, but most of the time, I think you got to create them. And part of that creation process is the relationships that you build with people. And that's what I mean when I say the market edge. That's why this video is called the market edge. It's not luck. It's not timing. It's positioning. It's in making deposits into other people. And the more meaningful conversations you have, the more you're going to realize that momentum creates opportunity. Look, I have a perfect example. I just had literally within the last month and a half, I had a new coaching client join our community. In fact, he joined on, well, I won't date it, but he recently joined.
Hey guys, this is Jeremy Velasic.
And Marianne Velasic.
Husband and wife. No, we wanted to actually just talk about a fantastic experience we had with Alex Pardo and Storage Wins community. So I was flipping through Facebook a few months ago, and Alex was on there talking about self-storage. And I have been a full-time real estate investor for roughly 21 years, primarily in the single-family home space. I have never bought a storage facility, although I have tried in the past. When I came across Alex on Facebook, God said to reach out to him because he did want me to do self-storage. And I did reach out to Alex, which I think he was a little surprised that I reached out to him. I've known him for about 15 years or so. However, it was a fantastic experience, and the community is amazing. Alex is fantastic, and he took away the scary parts of self-storage, like the management piece of it, how to find the deals, all the information that we would have fallen short or probably stumbled had we not been a part of that group.
How to evaluate a deal, which is really important. That was all.
Yeah, absolutely. So, Gary Keller talks often about standing on the shoulders of giants, and I absolutely would say that is true with Alex and the community. So we just wanted to give him a shout out, and we would highly recommend him, highly endorse him. And we did buy and close on our first storage unit. It was 185 units, roughly 33,000 square feet. And we were in the group 35 days. We actually got the deal when we started with the group, and we closed about 35 days later. So I just want to share our testimony for him because it was fantastic, and we just appreciate the group so much.
And one thing I want to add is Alex teaches us to make massive imperfect action. And that was probably one of the most powerful things that he shared, because nothing we do is going to be perfect, but if we don't take massive action, we won't get results. And so I love the community and all of the learning, and we feel 100% supported, and we're just happy to stand here and tell you how great Storage Wins is.
Absolutely. So if you are on the fence or even considered investing in self-storage facilities, I would highly recommend Alex, and I would highly recommend the community. Storage Wins.
Thanks.
31 days later, literally, we counted on a calendar. 31 days later, he was under contract on his first storage facility, and it happened to be a cool, flat, round $1 million purchase contract on a storage facility. No experience in storage, had never done this asset class, and he got the deal from another member in the Storage Wins community. Why? Because as soon as he came into the community, I got them connected, and he started planting the seed. He started building relationships. And that is where opportunities and doors can open up for you. So I want you to take a minute and just think about which of these three channels fits your personality. What do you think, which one could be your lane or your channel, right? Ask yourself, are you drawn to direct outreach and finding those hidden mom and pop opportunities like I am? Do you just naturally build relationships and see yourself as a connector, and maybe you're extroverted or that energizes you? Or do you want to just start by analyzing on-market deals and not having to do some of the work and energy it takes to find these off market, but you just want to see what's available and you're just going to go through them? There's no wrong answer here, just the right next step. One of the things I always share with coaching clients is, what is your right next step? And sometimes I think we just tend to overcomplicate things, and we know what the next step is, but it feels uncomfortable. because there's fear or you've never done it before. And that is likely what you need to be doing. Because the moment you decide where to start focusing, that's where the fog starts to lift. That's where things just become a lot more clear. So now that you understand where real deals live and how every opportunity moves through people, we're ready to turn this clarity into consistent activity. And now is when, on the next video, where we're gonna start to get tactical here. I'm gonna share my screen and we're gonna start diving into some things and things are gonna get exciting here. So in the next video, I'm gonna walk you through the cash flow maps method. This is the exact step-by-step system that helps you consistently find and track deals every single day, every single week, every single month, because I don't want you out there chasing listings. I want you building relationships. I don't want you to wait for an opportunity to come fall in your lap. Oftentimes, we need to go out there and create it through consistent action and through consistent connection. Because again, I said this earlier and I'll say it again. Conversation lead to conversions. Conversions lead to contracts. Contracts lead to cash. Cash leads to cash flow. I need to come up with a 5C naming system or something, but that's what I call the market edge. And that's how you can get your first or your next storage win. That's how you win in storage. So with that being said, I appreciate you taking the time to go through this. Again, I commend you and honor you for investing in yourself and for taking the time and energy, but don't just be that person that watches this and then doesn't take action, doesn't do anything with it. So nothing for you to do right now other than to start thinking about which one of those channels. And then on the next one, just come with an open mind, open heart, ready to roll up your sleeves and dive right into this. So remember this, great storage deals don't start with great facilities. They actually start with great markets. And when you understand the important demographics like the population trends, the renter ratios, the income levels, the supply and demand index, then you can start to quickly identify markets where the demand is going to work for you, not against you. And that edge alone can save you months and months from chasing the wrong deals in the wrong markets that were never going to pan out in the first place. And I can tell you with certainty, they can save you a lot of headache, heartache, and money from buying a deal in the wrong market, no matter how great the returns look on paper. So now that you know how to identify the right markets, the next step is actually learning how to build your deal pipeline inside of those markets. So in the next lesson, which may or may not be available here on YouTube, I'm gonna walk you through the cash flow maps method, which is the exact process we use to systematically find mom and pop storage opportunities. So I want you to make sure that you're plugged into the playlist, because if it's available, I want you to go there. Now, if it's not available, and even if it is, I want you to click on the link in the description so that you can create a free account to access the entire cash flow maps acquisition system. So not only are you going to have access to all of the videos, lessons, and training in a neatly organized membership site, but you're going to get the valuable tools and resources that I use for each module of the cash flow maps acquisition system. So click on the link in the description below, create your free account, access the entire system, and I look forward to connecting with you on the next one.